Hey everyone, welcome back to Corporate Decoder. Today we're unwrapping Corteva's latest quarterly report, and let me tell you, there are some juicy numbers inside that will make you say wow, and maybe a few exclamations of concern if you're not paying close attention. So this is essentially Corteva's scorecard for the 3 months ending June 30, 2025. It tells us how they're doing in the immediate short term and gives us a peek into their overall financial health. It's filed quarterly, giving us a timely update on their business performance. Corteva, for those who might not know, is a giant in the agriculture world. They split off from Dow DuPont a few years back, and they're a major player in both seeds and crop protection products like herbicides and insecticides. Think of them as one of the big companies that farmers rely on to grow their crops. Now let's dive into the profit and loss statement. This is where we see their sales and expenses. For the 3 months ending June 30, 2025, Corteva brought in a staggering $6.4 billion in net sales. That's up from $6.1 billion in the same period last year. They're selling more stuff, which is generally a good sign. Sales are up significantly, about 6% higher than last year. Even better, the volume of products they sold increased by 6%. This tells us that farmers and customers are buying more of Corteva's seeds and crop protection products. Prices also saw a small bump of 1%. Looking specifically at their seed business, sales jumped by 5%. This growth was pretty balanced between selling more products and getting a better price for them. Volume growth here is good news, especially in North America, where there was increased demand for corn. Now let's shift to crop protection. This segment saw an even more impressive 8% increase in sales compared to the same time last year. What's driving this? Well, volume is up a solid 11%, mainly thanks to strong performance in Latin America with their newer products. Prices in this segment, however, dipped slightly by 2%, likely due to some tough competition in Latin America. When we look at profit from these segments, it's called segment operating EBITDA. For the seed business, it was $1.86 billion, a healthy increase from last year. This improvement came from selling more products at better prices and cutting costs. In crop protection, segment operating EBITDA was $344 million, a significant jump of $79 million from last year. This was driven by lower raw material costs and productivity savings, which helped them overcome some price pressures. This report also mentions restructuring and asset-related charges. Corteva is undergoing some changes, particularly in their crop protection business, as they optimize their manufacturing network. They expect to spend between $50 and $700 million on this. For the current quarter, these charges were $79 million, a bit lower than last year's $92 million. These are costs associated with closing facilities and streamlining operations. Something interesting here is the other income expense net line. It jumped from a negative $113 million last year to a positive $103 million this quarter. This big swing is largely due to receiving insurance proceeds and not having some of the settlement charges they had last year. All this activity led to a substantial increase in their bottom line. Income from continuing operations after taxes was $1.38 billion this quarter, a big jump from $1.05 billion last year. This is a clear sign of improved profitability across the board. Now let's look at the balance sheet, which is like a snapshot of what the company owns and owes at a specific point in time. As of June 30, 2025, Corteva had total assets of $41.7 billion. Their receivables, meaning the money customers owe them, were pretty high at $8.6 billion. This is a pretty big number and shows a lot of credit extended to customers. Inventories stood at $4.3 billion. This is down from the end of last year, which could mean they're managing their stock better or perhaps selling through it faster. Total assets remain strong, showing the scale of their operations. On the liabilities side, total current liabilities were $9.5 billion. This includes things like bills they need to pay soon. Their long-term debt was about $1.7 billion, which is down from last year. This is a positive sign of them managing their debts. Stockholders' equity, which represents the owner's stake in the company, was about $26 billion. The common stock itself is a tiny fraction of this, with most of it being in additional paid-in capital and retained earnings. This shows how much investors believe in the company's value. Now, looking at these numbers from a Warren Buffett perspective, Corteva seems to be demonstrating solid operational strength. The increase in sales driven by higher volumes is a key indicator of strong market demand for their products, particularly in the seed segment. The improvement in crop protection, despite some pricing pressure, is also encouraging. The substantial jump in net income and EBITDA highlights effective cost management and productivity initiatives. The company is returning capital to shareholders through buybacks and dividends, which is often a sign of a financially healthy company. They also refinance some credit facilities, which can lead to lower interest expenses and improved liquidity. However, it's not all sunshine. There are some significant risks mentioned, especially regarding regulatory approvals. Corteva operates in a heavily regulated industry, and any delays or issues with getting their products approved, like genetically modified seeds or pesticides, by agencies such as the USDA, EPA, and FDA could hurt their business. Staff reductions at these agencies might slow down their review processes. An important legal matter to watch is the ongoing investigation by the Federal Trade Commission related to competition in the crop protection market. The FTC, along with several states, has filed a lawsuit alleging unfair methods of competition and anti-competitive conduct. This is a major risk that could lead to significant penalties or changes in how Corteva does business if they lose. Then there are the ongoing disputes with Bayer. Corteva is involved in several lawsuits concerning patents and licensing agreements for agricultural technologies. Some of these are still working their way through the courts and arbitration, and the outcomes could impact future revenues or costs. There's also a mention of remediation efforts at the Alton facility in Nebraska. Corteva is participating in cleanup efforts there, which could lead to significant costs. The company has set aside a reserve for its estimated voluntary contribution to these plans, showing they are acknowledging this potential financial impact. The company is also facing environmental proceedings related to legacy sites from its past, like the Pompton Lakes facility in New Jersey. These are long-term liabilities that are being managed, but they represent potential future costs or settlements. The significant settlement with the state of New Jersey for $870 million payable over 25 years is a notable item impacting their financial picture, although it is subject to court approval. Overall analysis, Kester. Overall, Corteva appears to be on a positive trajectory with strong sales growth and improved profitability in this quarter, driven by robust demand for its products and effective cost controls. The company is managing its debt well and returning value to shareholders. However, the company is exposed to significant risks from regulators that could have a material impact on the company's future financial performance. Alright, that's our breakdown of Corteva's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord in the description. Thanks for watching. See you next time.